Anything you set up to use drivers is going to calculate an amount or be driven, based on a different number. Drivers can be the total number of rooms sold, total covers, or a percentage of revenue. There are different options to pick from depending on what your company wants to use. What is unique about driver-based expenses is that these amounts are going to recalculate and automatically change, based on the driver they are attached to. Flat entry items are specific amounts that are entered manually. These will remain constant unless you manually make a change. A good example of this is cable television, where you know what the bill is every month. You can also use the plan page to enter expenses, and that's a really great way to list out expenses that are more quarterly, such as maintenance service contracts. There are a lot of ProfitSword clients that use this for their sales and marketing teams. To enter amounts for expense items that have drivers attached to them, let's look at this example. The GL account that you are working on is listed at the top, laundry and cleaning supplies. The driver shows up here in the middle. If you are not on the 12-month screen, you can hover over the line item, and it will show the driver. The driver here is total rooms with comps. You are going to want to add a percentage to the ratio column, and the amount is going to be calculated automatically. For these types of expenses where your driver is several rooms, the ratio is going to be a percentage of $1. In January, we have about 68 cents. February, we are spending about 60 cents per room. One of the best ways to find out what ratio makes the most sense for your forecast is to look at historical data. You can do this by utilizing the comparison column. Select the options icon and select two comparisons. One option is to use the budget and actuals of last year. Some companies have an SOP guideline for what your ratio should be for some expense items as well. If that data is available to you, you can certainly use it. We are looking at number of occupied rooms, but it could also be a total number of rooms or total number of rooms with comps. It will most likely vary by company and by GL account. Drivers can be set up to calculate based on a percentage of revenue. This is very popular with food and beverage outlets, but can also be used on line items such as travel agent commissions. The driver line at the top shows that this line is being driven based off our total room revenue. You'd want to add a percentage to the ratio column only. Since the driver is based on revenue, we want the ratio column to be a percentage of our revenue. If we want 2% of the total room revenue to go to travel agent commissions, we will put 0.02 in the ratio column. The amount will be calculated automatically for us. As our total revenue increases, the amount will increase. If the total revenue forecast decreases, the amount will decrease. Some expenses are going to be consistent throughout the entire year. For these, flat entry is usually the best option. A good example of this would be your cable television bill. You can enter in the same amount for every month of the year. The flat entry expenses will not change or update automatically. If you need to increase the allocated amount, you'll need to manually make the change. Let's talk about the Plan tab for expenses. If you have expenses set up to be forecasted or budgeted by plan, you will see the word Plan under the Actions column. You will only be able to use the Plan page to enter those expenses. You can select the word Plan under the Actions column, or you can select the tab at the top of the page. For these plan designated expenses, you will not be able to use any of the other page views. The Plan page is common with sales and marketing teams and other expense accounts like maintenance contracts, where expenses occur on more of a quarterly basis. Once you select Plan from the Actions column, or the navigation bar at the top, you're going to see this screen. The GL account name and year are at the top of the page, and a total column is on the far right-hand side of the screen, but you're not going to see any comparisons here. You'll create a list of the items, and then put in when that expense would hit your profit and loss sheet. Use the Add icon at the bottom to add a new line. When working in the Plan page, you don't want to delete any existing items. Each of these lines is tied to historical data in the system. If you delete a line, you'll change past reports, so a best practice is to create a new line when you need to add a new expense. The Plan page is also helpful for expenses that hit a few months within a year or once a quarter, but it can become very cumbersome if you use it for every expense item. So be selective about when this is really going to add value to your forecast.